Welcome. In this video, will Zbcn coin go up from here? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. This horizontal resistance level, which I've highlighted in detail in previous analyses and videos, has proven to be a significant barrier in terms of price action. Despite being tested numerous times in the past, it has not been easily broken and has consistently managed to push the price back. In the most recent attempt to rise, it once again came into play. After the price reached this zone, it was rejected once more and turned downward. This shows us that the resistance level continues to be a valid and strong selling area from a technical standpoint. However, there is a common principle in technical analysis. The more a resistance line is tested, the weaker it becomes. So even though the resistance appears strong, repeated testing may indicate that this barrier is gradually starting to wear down. Therefore, if the price approaches this zone again in the coming period and tests it once more, the probability of an upward breakout could be significantly higher compared to previous attempts. Additionally, repeated tests of such resistance levels are critical decision points for both buyers and sellers in the market. While sellers continue to apply pressure at this level, buyers increasingly anticipate that the barrier will eventually be broken. For this reason, if the next approach is accompanied by increased volume and stronger momentum, the resistance may be breached to the upside, potentially allowing the price to reach new levels that were previously unattainable. On the other hand, beyond the technical structure, approaching this level also creates a psychological effect on investors, triggering thoughts like, will it break through this time? Once this psychological threshold is crossed, it's quite likely that the price will behave as if there are no major barriers left. This can lead to sharp upward movements following a breakout. In short, although this resistance level, which has previously worked very clearly, may have once again pushed the price downward, if the price returns to this level in the future with sufficient volume and buying interest, the chances of a breakout will be higher than in past attempts. In a potential breakout scenario, price acceleration and a move toward the next resistance zone can be expected, but we shouldn't rely solely on trends. Other metrics also need to be considered. Stay tuned. One of the most notable details in the Fibonacci measurements taken from the bottom to the peak on the chart is that the price has not yet reached the golden ratio zone between the 0,618 and 0,786 levels. This zone represents much more than just a mathematical ratio in technical analysis. Widely regarded by market participants as a retracement area or potential reaction zone, this range has historically proven to be a key turning point across many different instruments. The 0.618 level, known as the golden ratio, is a naturally occurring level within the Fibonacci sequence. It holds psychological significance for investors and is often a point where buyers step in during a retracement. When the price reaches this level, it frequently shows signs of shedding selling pressure and begins to regain upward momentum. Slightly below this, the 0,786 level is also known as an area where price may make one final dip before sharply reversing to the upside. These two levels are among the most critical technical zones to watch, especially during in-trend corrections. The fact that the price has not yet touched this area suggests that investors remain cautious and that the market is still in a phase of seeking balance. This observation is particularly important for medium to long-term investors. Additionally, when analyzing the volume profile, it is often observed that significant buying and selling activity has taken place near these retracement levels in the past. This implies that once the price enters this zone, both large players and algorithmic systems are more likely to respond with a reaction. These areas, frequently utilized by institutional investors and professional traders, offer key clues as to whether the trend will continue or face a possible reversal. If the price reaches this golden zone identified by Fibonacci and reacts strongly, it could signal not only the completion of a correction, but also the beginning of a new upward wave. In conclusion, the fact that the price has not yet reached these critical retracement levels may present a potential opportunity zone from a technical perspective. However, carefully observing the price behavior in this area and timing entries accordingly will be essential for making strategic decisions. Once the price reaches this zone, the reaction it gives will help clarify whether it's merely a short-term correction or the beginning of a longer-term trend reversal. A position can be taken based on the reaction at that level. MACD, or Moving Average Convergence Divergence, is a widely used indicator in the world of technical analysis, favored by investors to measure market momentum. This indicator helps us understand the strength behind upward or downward price movements, while also providing important signals for potential trend reversals. Looking at the current state of the MACD indicator, we can see that the lines have moved deeper below the zero level, and are oscillating in the negative territory. The MACD being below zero is technically interpreted as a signal of a bearish market. It suggests that the current momentum is weak. Selling pressure outweighs buying interest, and negative psychological factors like uncertainty or fear still dominate the market. However, the key point here is not how long this weakness will last, but whether a recovery is on the horizon. Specifically, whether the MACD lines will converge and form a bullish crossover. Such a crossover is often seen as a signal of a potential trend reversal and indicates that the market may respond with upward movement. The MACD consists of two main lines, the MACD line and the signal line. The interaction between these two lines provides valuable information to investors. When the MACD line crosses above the signal line from below, especially when this happens below the zero level, it is known as a bullish crossover. This type of crossover often suggests that the downtrend is coming to an end and a new upward wave may be starting. Although the current position of the MACD lines in the negative region may seem bearish at first glance, historical price movements and past examples show that crossovers occurring below the zero line often precede stronger upward moves. This is because being below zero usually indicates that the price is significantly oversold and may be approaching a reversal point. It lays the groundwork for a potential bottom formation followed by an upward reversal. More importantly, when we look at the MACD histogram, the shortening of the bars or the slowing of the negative momentum is also a significant sign. It indicates that the bearish momentum is weakening and buyers may slowly be stepping in. As the histogram bars move closer to zero, it also implies that the gap between the two lines is narrowing, suggesting that a crossover may be near. These graphical signals are particularly valuable for medium and long-term investors aiming to catch trend reversals. In the current scenario, if the MACD line begins to slope upward and crosses the signal line to form a bullish signal, it could have a positive effect on the price. If this crossover is accompanied by an increase in trading volume, it would further support the likelihood of a more sustainable rally. Volume-backed movements are generally considered stronger and more reliable. Of course, no single indicator in technical analysis offers absolute certainty. However, momentum-based tools like MACD are powerful in analyzing the psychological and structural forces behind price action. Therefore, if the MACD lines currently below zero start to make a bullish crossover in the near future, it would be more than just a chart movement. It could also signal a shift in investor sentiment, a return of buying strength, and potentially the beginning of a new uptrend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.